earnings announcements, and lately we're seeing some mixed messages. Chicos store comps are up over 29%. Best Buy is down. Bed Bath & Beyond announced 150 store closures. So this week, we're going to make some sense of the mixed messages. We looked at the recent performance of 9 retailers, and we're going to talk about what the common themes are and what they say about the future of retail. You're watching Everything We Know About Retail. It's the show where we tell you everything we know about retail. We broadcast live on the internet most Thursdays at noon Eastern, 9 Pacific, but you can watch us whenever you want. We're on YouTube at everythingweknow.show. You can watch the full archive right there over on YouTube. So my name is James Cook, and I'm coming to you live from Indiana.
And my name is Ebere Anokute, coming to you live from New York.
And my name is Keisha Virtue, coming to you live from South Florida.
And we all research retail and real estate for JLL. Today, we're going to look at 9 retailers' recent earnings, focus on store comps, new store openings, and really like what's driving them. So like what's the common theme? What's the outlook? And we're going to be looking for mega trends. So this is like Pokemon, where you got to collect them all. We're going to collect the mega trends. So after each retailer, we're going to pause and decide on what is the mega trend affecting that retailer. What's the big takeaway, the big theme? I'm going to write it down on one of my fancy futuristic writing devices here, the note card. And then at the end of the show, we're going to do a theme roundup. And we're going to see, what are the common themes and what do they mean for the future of retail? What do they mean for the holidays? And what do they mean beyond that? So let's get into it. And Keisha, I think you're up first.
Great. Let's kick it off with some good news, James.
All right. I love it.
All right.
Start with the good stuff.
Yeah, we're going to talk about Ulta, whose Q2 sales were really up. They soared 17% over Q2 2021, and they're up 38% since pre-pandemic levels in Q2 2019. So very good news for Ulta. Comps were also doing pretty well as well, 14.4% year over year. And that's due to both increased number of transactions and increased average ticket size. So people are going more and they're spending more when they do. So very good news for Ulta. Both online and in-store sales expectations are pretty strong. And interestingly, even the digital orders are, at least a third of them are taking place within the stores. In other words, people are placing online orders and then they're doing buy online, pick up in store, or same day delivery or ship from store. So stores are very much involved in the whole Ulta success story right now. As a result, Ulta is planning to open more stores, of course. Why wouldn't they? So there are 50 new net stores in 2022, and they're relocating 35 as opposed to more optimal locations. And of course, we already know the story where they're opening inside Target stores as well. They are planning about 250 stores within Target this year to reach a level at about 800 stores overall. So Ulta is really, really planning on a very aggressive move forward. And it does make sense because what's happening right now? Well, we're having a makeup moment, I think. Sephora is doing well, Ulta is doing well, beauty traffic overall is heading upward as we get back out there and start socializing again. I think we all just want to look a little prettier. So I think we're going to see this trend definitely continue in the coming months, particularly heading into the holidays.
Very good news for Ulta. So the theme there, is sort of, makeup moment, but it's really about people going back to work, people going back to going out again,
exactly,
like occasions. So is that our big theme for Ulta, our big theme number one?
Yes.
Okay, so people going out again and wanting to look good.
And I mean, that ties perfectly into some of the stuff that Keisha's been producing on the Outlook side, right? As far as the shift from goods back to services and experiences. as we're going out to these experiences. We got to make sure that we know we're looking good. And it's been a little while since we were outside for a lot of us. So, I can definitely see us relying a little bit more maybe on the makeup and stuff like that. And like Keisha said, bigger ticket purchases than previously. So I think that aligns perfectly.
So what was a stat? Did you have a stat about people making digital orders in the store?
Well, what was reported is that about a third of their digital orders are being fulfilled by the stores.
Oh, fulfilled by the stores. I was thinking about actual digital orders being made in the store, which I'm sure is another trend too, but that's great. A third of orders being fulfilled by the stores. That's fantastic.
Exactly.
All right. 1 down, 8 to go. Ebere, you're up with we're opposite end of the spectrum now. Let's go to Dollar General.
Let's go to Dollar General, James. I mean, we're continuing with some of the good news, right? We love good news. So we know that discount has been one of the most, not even one of the most, the most active category when it comes to new store openings for a few years now, right? And what we think is driving that, especially now, is inflation placing pressure on some other categories. So shoppers and consumers are definitely trying to get the most bang for their buck at some of these discount locations, especially, I know Keisha in the back to school report, you reported that a lot of parents were going to opt for some, discount locations for school supplies and things like that. So with all of that momentum behind them, we saw Dollar General sales increase by 9% year over year in Q2. And gross margins increased by 70 basis points, mainly due to markups in price, as well as a shift on the consumer side to the lower margin consumables. Consumables themselves saw sales increase by 13% over last year, and now they make up almost 80% of all sales. So as a result, operating income at Dollar General grew by 7.5%, while the operating margin remained flat at around 10%. And we see all of this good, positive news translating into some new store openings, right? So Dollar General opened 466 stores so far this year. I'm sure if we put that up against, any other retailer, they'd probably be far away in the lead. And they closed 30. So now their overall total stores in the US, this number astounded me. I don't know if this is going to astound you guys, but they have 18,566 stores in the US, which is an 883 store increase over last year, right? So that is a lot. And that's crazy because I feel as though I couldn't tell you where the closest Dollar General is to me right now. Like I've obviously heard of the chain, but I couldn't tell you where to find it.
That's so funny. I mean, there's not that many chains that are in the tens of thousands.
Exactly.
Exactly.
But right. Well, Ebere, where you live, is not Dollar General country because it really is lower income, urban or rural.
Right.
I don't live in a particularly lower income area, but I live in a rural area, and I can think of 1, 2, 3, 4 Dollar Generals within like 10 miles of me. So yeah, it's really about where you live.
Fair enough. Fair enough. I could find a dollar store, nearby, but the Dollar General brand, I hear so much about it, and I'm just like, I need to go, pull up to one and see what all the hype is about. But all of these encouraging results led for the company to raise their guidance for the rest of this year. So they raised their expectations as far as sales growth and overall comp growth. So I mean, the takeaway to me is inflation is placing pressure on other categories, and so we gotta get it in where we fit in. And sometimes for some items, whether it's back to school supplies or I don't know, everyday essentials here and there, we're gonna have to go to Dollar General for those.
So the theme seems to be for our theme card for Dollar General, people are trading down. So that's what I'm getting out of this is that folks who might have done most of their grocery shopping at, say, a Kroger or a Safeway, lower income families are trading down and doing more of their consumables and their everyday necessities at Dollar General just because it's cheaper. Does that make sense to you guys?
Definitely.
Absolutely.
Okay, so we'll say for theme, lower income, or even, not even just lower income, but just shoppers trading down. That's really the theme. Like it seems like everybody's on a budget now.
Yeah, absolutely.
Shoppers trading down is our theme card for Dollar General. I'll add it to my pile over here. And we're going to get into our next one. Whoa, I lost my notes. Okay, here we go. Up next
You're up,
is
James.
Chicos, FAS. And so Chicos announced last night. So I just was digging into this morning, and sales are up 18% year over year at Chicos. This is despite the fact that they have 26 fewer stores. So they've been cutting underperforming stores, and it hasn't been hurting overall sales. When you look at the comps, so Chico's FAS has Chico's, they have White House Black Market, and they have Soma Intimates. That's the other one. So comps at just the Chico's brand were up 29.7%. Which is just blew me away until I saw White House Black Market was up almost 32%.
Wow.
Now Soma Intimates was down 9%, which makes up, they're not a huge part of, like most of the stores are, there's more Chicos and White House that make up the fleet. But okay, so anyway, let's dig into that a little bit because I think this is where the themes come in. So Chico's target demographic, I would say boomer and Gen X women. Is that fair?
Very fair.
Kind of middle to higher income. I mean, if you're young, if you're in your 30s, you're probably not shopping at Chico's, I would say. I also remember that my wife's grandmother, Chico's was one of her favorite stores. So that's kind of like where that fits. I mean, it's not that it's not hip or anything. It's just the target demographic skews a little bit older. White House Black Market, I think, is younger, maybe like mid 20s and older. And also income demographics for both of these are kind of middle to high, would you say?
Yes.
Yeah. So both of those, these are categories, again, people are out in the world, going to work, going to parties, going to church, again, more, all that stuff. And so, I mean, I think that's what's feeding it. And then Soma being down by 9% makes perfect sense. They have loungewear. They have what they call the cozy category, which is, the lockdown outfits. So obviously those are going to be down. So I think that's kind of like the main themes there is, again, lockdown freedom, I guess, getting back out into the real world. One other thing I want to touch on too with Chico's is they've been saving a lot of money by shipping freight in the ocean as opposed to the air. So for a while, they were kind of stuck, with all the supply chain issues, more air freight. But what they did is in 2020, they changed their inventory calendar. So they start their production calendar, rather. They moved it up 10 weeks earlier. So basically what that means is now you have to be 10 weeks earlier in deciding what you're going to sell in the store. But because you do that, now you don't have to fast ship it by air. You can ship it by sea, and they're saving 50% in freight costs. So that's helping their overall profit margins as well. So what are we thinking about theme for Chicos? Back out in the real world?
That, and again, it's the higher income consumer as well, which will tie into what I'm going to talk about next.
Okay.
Both Chico's and White House Black Market are in the mall closest to me, which is a very high-end Simon Mall. So that's kind of a nice little window into what's happening overall, I think. And yeah, they're doing well. Okay,
so return to the real world and the higher income shopper still shopping, I guess. Does that make sense?
Yeah.
Okay, excellent. So that's Chicos. I'll add Chicos to the trend pile. And up next, Keisha with Nordstrom.
All right. So more good news. As we look at Nordstrom, Q2 sales grew 12% year over year. And this is largely due to strong demand in both men's and women's occasion wear, or what I like to call going out clothes. So, I mean, this is what is happening. Again, as we move towards socializing, those items where people want to look good and they want to head out, I mean, that's definitely increasing in demand. So higher priced luxury items also outperformed lower priced private label or clearance goods within both Nordstrom and Nordstrom Rack. So essentially, what's happening here is notably high income shoppers are buying more luxury items than they did during the same time last year. And as concerns over COVID wane and people get back out there and have fun, this is just a continuing theme. A Nordstrom Rack is really what's pulling down the numbers because the lower income consumers who would have taken advantage of those sales and deals are pulling back on that kind of discretionary spending because of the increase in prices for food and gas. So it does make sense. And of course, they're heading to stores where it's even lower, like dollar stores, right? So we're definitely seeing that pullback in the Rack. And Rack also suffered excess inventory for private label and clearance stuff. So they're really going to have to focus on right sizing their inventory heading into 2023. So that's definitely the focus for Nordstrom, just kind of getting their Nordstrom Rack inventory in check. But luxury wise, it's really good news for Nordstrom, and they're doing well. They are going to pull back on overall 2022 expectations because of these private label and clearance items, but it's pretty strong for them overall.
I feel like I'm living in an alternate reality. It used to be not that long ago when we talked about Nordstrom, we're like, oh, Rack is where all the growth is. It's all in the value shopper going to Rack. Now it's the opposite. It's just that's why I love retail is nothing ever stays the same.
That's true. But I mean, I don't think that they announced any plans to open any new Nordstrom locations, right? So I feel like,
well, they do have plans to open or relocate 6 Nordstrom Rack locations between now and early spring next year. I'm thinking more relocations than openings, but markets like Phoenix, Birmingham, and Wichita. So, I we'll see how that goes. I mean, I think maybe they're hopefully putting them in more optimal markets for Nordstrom Rack. But I would say we're seeing a bifurcation. So we're seeing luxury do really well. We're seeing stores like Dollar General do really well, and Nordstrom Rack, which is certainly discount, but definitely not like super low price, is definitely falling in that middle category where it's not doing so well.
So for our Pokemon card for Nordstrom, and I use the term Pokemon. I actually have never played Pokemon. Like you collect cards, right? That's like how it works.
Yeah, that was how it worked. Yeah.
Okay, so we're collecting our retailer Pokemon cards. Wait, what do you do then? Is it a card game that you play?
Wow, you're taking me all the way back, James. You can use the cards, you trade them with other people to try to get better cards. Some people sell them to other collectors, and there was a way to battle with the Pokemon cards.
Right.
Each card had like their different
sort of strength or something.
Exactly. Right? Yeah. So you would slam the card down with a lot of aggression to your fellow third grader.
I like it. So I've got a Nordstrom. Pluses on my Nordstrom card are the luxury consumer still spending, and the minuses, my weaknesses, are the value consumer, right? So how do we, for our mega trend for Nordstrom is Lux shopper strong.
Strong. Yeah.
And value shopper. I mean, where's that value shopper going if they're not shopping at the Rack? Like they're going to, I guess, Ross? Would you say the price points at Ross and TJ Maxx are lower? I always thought they were about the same.
That's a good question. I'm not certain.
Maybe they're just not going.
Maybe.
Yeah.
Value shopper decreasing, I'll put.
Yeah.
I mean, anecdotally, I would say the Nordstrom Rack inventory, they do need to take a look at it because it's not as good as in previous years where you'd find something maybe exceptional. That's for me. I mean, this is my take. I don't see stuff that I would want to buy. Whereas in previous years where I used to definitely shop through their haute look concept, I don't because there's just nothing there that I want. I would much more rather go to either spend the money at Nordstrom itself or just, go somewhere else.
Yeah, I feel you. All right, so Ebere, if I were to offer to trade you a Nordstrom for a Bed Bath and Beyond, you'd probably take me up on it, right?
Yeah, I would definitely take you up on that, and it wouldn't be the most ethical trade because I'd be taking advantage. But yeah, let's get into Bed Bath & Beyond. Let's do one collective deep sigh, right? We had a lot of good news. Thanks, guys. Yeah, we had a lot of good news at first, earlier on in the episode, and now we're turning a little bit. So it's interesting because home furnishings, right, was doing really well earlier on in the pandemic, right? We were all at home for the most part, so we had time and opportunity to do some projects around the house, or even just spruce up, buy some new pillows or something, some new bedding we've been wanting to do. And so they were doing really well, this category, but Bed Bath has been struggling for a little while now. So they ended fiscal year 21 pretty poorly. And that continued into the first quarter of 2022, where net sales fell by 25% year over year. Now, they haven't released their 2Q sales yet. That doesn't come out till the end of September. But these are Q1 numbers that we're discussing now. Bed Bath & Beyond themselves saw same-store sale comps fall by 27%, whereas Bye Bye Baby, which is their other banner, comps were down in the single digits in that area, but still not positive overall. This sort of not good earnings results, combined with the behavior of the CEO, the former CEO, Mark Tritton, caused him to lose his job, right? Something that he did that came up a lot in a lot of the research that I did was that he spent nearly $1 billion in the last 7 quarters on buying back shares. And now the company is facing a major liquidity problem as a result. The problem is so severe that they are not only cutting shifts for the employees at the stores, they're literally lowering the air conditioning to save on energy costs.
Oh, that hurts.
Oh no.
Like
that's a quality of life issue for me, man.
Exactly.
Oh,
I mean, I'm sure that's going to lead to labor shortages, because I don't want to work somewhere that's not air conditioned, especially if I'm standing on my feet for the entire 8-hour shift. So like I said, that is the major concern for them right now. Total debt for them is at around $200 million, whereas their cash balances are at around $800 million, which is down $900 million from the same period last year. As you can imagine, the stock has gone down considerably as a result. According to Google, it's down 41% year to date. So what it was in January versus where it is now, down 41%, the stock price. So they're obviously, the name of the game now is going to be restructuring. We're going to have to restructure to get themselves out of this sort of hole. So recently they secured a new loan for about $500 million from some private equity investors, which they're hoping is going to help with their liquidity issues. And they've also, unfortunately, announced some cutbacks in a lot of places. So they're going to be closing almost 150 underperforming stores across the country, which I believe is the biggest store closure announcement that I've heard of to date this year, as far as like individual retailers. And they're also going to be shrinking their headcount by 20% across the company. So, what's the takeaway here?
Well, I think it's the same. Well, okay, so it's the reverse of we talk about the trend of people going out.
Mm-hmm.
It's the same thing we saw with Soma Intimates. People aren't as home as much, right, so they're not spending as much on homes. Is that fair?
I'm not sure, because Williams Sonoma seemed to have been doing okay for their last quarter.
So interesting. Okay, let me throw this out there. Williams Sonoma is like the luxury of cookware, and also Bed Bath & Beyond. Only one part of Bed Bath is about cooking,
right? The Beyond part.
Right. Yeah. That's in the Beyond area of the store.
Yeah, that's it.
Is that fair? I mean, as I think about Williams Sonoma as like luxury cookware, right?
Mm-hmm.
I think so. Yeah.
So yeah, and so I mean, and the other part of the story too is that Bed Bath took a big push into private label,
right?
And for whatever reason, that didn't work out. It's just bad timing. It's a time where people want name brands, so they're cutting back now on that. And so I'm gonna say like the kind of it's two things. Well, What would we say the one mega trend for Bed Bath and Beyond is that we're going to put on our trading card?
For me, honestly, I think it's more a differentiation issue because what
Okay.
they sell, other people sell who do it better.
Right.
So whether you're looking at something more high end like Williams Sonoma Pottery Barn, or you're looking at a Target and a Walmart who all sell basically the same kinds of stuff.
Right. So it's caught in the middle.
Yeah.
Right.
You're too expensive for the value shopper and you're too cheap for the high-end shopper.
Yeah.
So maybe we should just talk about bifurcation. Would that be
Yep.
how we would put
Yeah,
that?
I think
I think so.
bifurcation is the name of the game here.
Yeah, I
Shopper.
think that's definitely the overarching theme. I wonder also if they haven't done enough to bolster their e-commerce capabilities. I don't know. I don't really hear about Bed Bath and Beyond in the omni-channel e-commerce conversation, so maybe that caused them to lack a little bit, because we know, at the beginning of the pandemic, it's normalized now. There was a big shift towards shopping online, more so than we'd seen before. So I wonder if that's it. And this might be a little anecdotal, but I was thinking to myself about when I shop at Bed Bath and Beyond, and it was going to college and like moving, right? So
Yeah.
with apartment costs, at least in New York City now, reaching like, I think the average apartment was like $4,200 a month as of like last week or something like that. I wonder if there's something about people moving less. I wonder if people are going to school online more, and if that could be impacting, because that's really when I would go to Bed Bath and Beyond for the most part, is in those sort of transitional periods in my life. So I wonder
That's
if
that's a great point, Ebere. I know that home sales, I mean, I don't track residential that closely, but I think they're down
I think so too.
nationally. So yeah, that's a great point. That's when you're going to do the most BB&B shopping is
Yeah,
when you got a
absolutely.
new home.
Yeah, need curtains, towels,
Mhm.
all that
Yeah.
stuff. So
Mhm.
yeah, unfortunate.
All right. Well, up next is Gap Inc. And Gap, is the traditional brand, but sort of the growth engine for Gap has always been, or not always, but recently been Old Navy. Old Navy. So Old Navy comps fell 15%. Not good. Gap comps fell 7%. They blame that on an imbalanced merchandise mix. In other words, just supply and demand issues with inventory. The stuff they had in stores wasn't the stuff that people wanted. They also had size and assortment imbalances. It was a great story with Old Navy when they said they were going to expand their sizes, and they were going to have more, plus sizes, and just like you just be more accepting of sizes.
Right.
But I think that's so many more SKUs in the store. It just makes it difficult to keep the right sizes in the store. So I think that's been a challenge, along with the supply chain disruptions. The demographic for Old Navy, and I think Gap, is middle and then lower income shoppers. Is that fair? Maybe Gap is more middle and then Old Navy is middle and lower.
I'd agree with that.
And those are the shoppers that are being hit by inflation. So, I mean, it's really just an inflation story. They also own Athleta, which is getting hit by people not buying as much as athleisure now. Their comps did go up, but only by 1%. The standout for the Gap was Banana Republic, which grew by 8%. And, price points are higher. Again, this is funny. It's like we're now repeating a broken record here.
Yes.
Price points are higher. It's also, I mean, I'm wearing a Banana Republic shirt right now.
James, me too. Me too.
I am a fan.
I generally go once a year. It's my back to school shopping. It's usually in the fall or winter when I get some new work clothes. And so, yeah, I can see that. So our trend for the Gap trend card, it sounds like that really, bifurcation again, just or really it's about inflation impacting the middle and lower income shopper. That's what it means to me. I would say that is the mega trend.
I wonder, I mean, it makes sense that Banana Republic grew. I think that they make the best chinos for like going to the office. Like I will evangelize those everywhere. I wonder about Gap and Old Navy just not really expanding the variety of their offerings. We talked a lot, I think, at the beginning of the e-commerce penetration era about those stores that weren't offering anything different having to close down because now we can order anything online. And when I think of Gap, honestly, I think of a white T-shirt and dark blue jeans, and I feel like that's been the branding for so long. So I wonder if I mean maybe that's not much of a macro trend, but there definitely is something to be said there about not really adapting to the times, not really evolving with us and giving more options. So we're going elsewhere for our clothes.
Exactly.
Yeah.
And it's exactly the opposite for Banana Republic. If you go on their website, man alive, did they do a good job?
Oh yeah,
I mean, as far as curation, as far as how they display the clothing, it's really exceptional. I mean, I'm a huge fan of them as well. So yeah.
agreed. And they're willing. They're Banana Republic is willing to do a funky print where Gap would never try it. You know, so
Exactly.
it
Yeah.
might be hit or miss, but I think the risk is paying off for Banana
Yeah.
Republic.
Yeah.
I got a shirt at Banana Republic that has all these like astronauts on it, and I wore it because there was supposed to be a launch, I guess, the other day, and I was at a conference, so I wore it that day. So I was like, "Great job, Banana! Cool print."
We love them.
There you go.
Okay, cool. So we've got our Gap card. Up next is Best Buy. Is that right?
Yes. Well, I mean, I've been focusing on a lot of positives, but this is not so positive. Best Buy Q2 sales fell 12.8%. Their comps were similarly down 12.1%. And almost all categories saw a decline. But the largest drivers of this dip were computing and home theater. The recent results really align with what we've witnessed happening because of the rising inflation. People are moving away from the durable goods again into services and experiences. So I think this is what we're seeing reflected here. Um, Also, I think there's some sort of comparative story because during the worst of the quarantine and lockdowns with the past couple of years, everybody was buying home theater and related appliances, right? So I think there's just the comparison over previous years is just it's just they're just going to fall short regardless. But
Yeah.
I do think Best Buy has a very strong long-term strategy. I mean, we've seen this with them opening this very new concept, the digitally focused small format 5,000 square foot store in North Carolina, where they're really focused on selling best in category items and they're really amping up their sales and services in that particular store. So it's really going to be interesting to see how that evolves and how that does compared to their other store formats. And they're also long term going to be focusing on health monitoring tech. So I think that's also a really good move. They did manage to control their inventory pretty well over the last, I guess, year or so. So they're not really suffering. Their inventory is actually down 6% year over year. So we're hearing a lot of, retailers, even retailers who are selling well with their, margins really being hit by because they have so much excess inventory. That's not a problem for Best Buy. So I think that will play into their long-term overall strong performance. So we just need to kind of see what's going to happen in the next coming months. But I don't think they decreased their 2022 outlook. I think it's pretty similar to what's been is this current dip.
Gotcha. So Best Buy comps down 12, 13% almost.
Comps down 12.1.
Okay. So the trend, they were just doing so well with school at home, work at home.
Mm-hmm.
Everybody needed technology. That's
Yep.
like why they were killing it
Mm-hmm.
in 2021. Now we're in 22. So it's back to school, back to work. Is that the mega trend for Best Buy?
I think so.
That's it.
Okay.
So,
So back to school and work. For me, Best Buy is the place that I run to get, cables or, I don't know. I needed a SD card reader, that kind of thing. And also, when you're going to get a new television, I feel like that's a place that you often go. And now's not a time, I guess, people are buying new televisions. All right. So we've got our Best Buy card. Back to school and work is the mega trend there coming out of the lockdown. So up next, we're doing Express. Not a place I've shopped at myself much. Either of you Express shoppers?
No.
I've popped in when I saw it at the mall, but it's not a place I think to go to.
Yeah, and it's interesting because it is, they have men's and women's clothing. I've thought, I can grab a suit maybe at Express, but I've never really gone in. I don't know. Maybe I'm a little old. I mean, demo for Express
Yeah,
is probably 20s and
definitely
30s.
20s. Yes, for
Yeah.
sure.
Right.
Keisha's like,
Looking at that in the rearview mirrors.
Keisha's
Yeah.
like, you're way too old for that.
I'm talking about myself. No, I just
Uh-huh. Yeah,
what do
yeah,
you think?
sure,
Yeah.
sure. So comps up 1% at Express in Q2, which is worse than they expected, but it's still positive. They have their outlook is that store comps are going to decline in the mid single digits in the coming quarter. So that's a pretty negative outlook. They have, I think, one interesting thing, and this is an aside, this doesn't really affect their performance overall, is they spun up this DTC lifestyle brand called Up West. Have you guys heard of this? Started in 2019.
No, I haven't.
No.
And it's kind of like a DTC brand, and now they've actually opened some physical stores. There's one in Santana Row, there's one in Hudson Yards, there's one in on M Street in Georgetown in DC, one in North Park in Dallas. So you kind of get a sense of what, they're kind of being selective about where they're putting these. So I think the idea at the time was, hey, there's all these DTC brands that are doing really well. Let's do one of our own. There's only a handful of these, and there's, gosh, I don't know, like 500 or 600 Express stores. So it's not going to affect them overall, but I just think it's interesting that they're experimenting with it. So outlook for Express is negative. But they're still like current quarter, pretty flat. What do we have to say about that? Their target demo is a bit younger. So is that what the effect is? That even though it's sort of, I would say the target demo is the professional man and woman in their 20s and 30s. Is that fair for Express?
I'd say yes, with a heavy emphasis on happy hour. I'd say.
Yeah, I would say that's definitely true. It's a very good way of putting it.
The dressing. It's like you're
Yes,
definitely gonna go to the office, but you're definitely going out after.
it's a little festive. Yeah.
Oh, I see. Interesting.
It's a little
So
bit going out clothes ish, kind of like what Keisha
Yeah.
mentioned before.
Yeah.
so it's your Friday night, your
There you go.
Friday outfit where you're going to go out after the office.
I'd say so.
Okay. So what's our theme for Express? Because comps were mildly positive. Maybe it's because their target demo isn't older, so they don't have as much, savings income.
That could be it. I also think it could be a bifurcation situation as well.
Yeah.
There,
I think it's
the
the middle of
price
the
point.
road.
Yeah, the price point is really in the middle, and like we're seeing those sort of middle of the road retailers have been struggling in the past few years. So I mean, I think that's, and I don't know, Express I don't know. I almost wonder how they're still around necessarily, because I feel like anytime I've walked past or gone in, it's never a lot of people in there, and I feel like I don't really hear people talking about Express so much. But whereas other stores in the mall near me have closed down, gone out of business, Express has been a mainstay. So they're doing something.
I mean, there's certainly people shopping there, and I don't want to go too deep into Express because I'm not an expert. The one thing that I've looked at is suits at Express. And to your point, if you want to get a cheap suit, there's cheaper places. And if you got money, there's nicer places to get suits. So it is kind of that middle thing.
Yeah.
But still, I feel like if you're sort of starting out and you're the first 5 or 10 years of your professional career, it seems like a good place to shop. And I think that's why their comps are still positive. So Express mid price point is tough. That's the theme here. Is that right?
I think so.
All right. So up next, we're going younger. We're going Urban Outfitters.
Let's go to Urban Outfitters. I would love to. One of my favorite stores, honestly. And I don't know if I might be the store I patronize the most. It's between them and maybe ASOS, but I really do love their product mix. So their results, we kind of started with the good news, went a little bit into the bad news. Urban Outfitters is sort of mixed, right? So they saw record high consolidated sales, which reached over $1.2 billion. but at the same time, they saw their operating income drop by nearly 50%. So very mixed bag there. Comps are up by 1%, and they were driven by low single digit online sales, whereas store traffic was flat. But that is, when compared to last year's numbers, which were obviously very elevated compared to the year before, when these stores probably weren't even allowed to be open. So there are a bunch of different banners under Urban Outfitters, and I think both of these skew towards women, especially maybe 25 to 34, maybe even older women. Free People.
Yeah.
So, were you gonna say something, James?
I was just gonna say I think of Anthropology as a little bit older, but we'll get into it in a
Older, yeah.
second.
Yeah,
Go
definitely.
ahead with Free People first.
Yeah, so Free People, yeah, definitely in that 25 to 34 range, kind of like a bohemian vibe. Think very flowy shirts, things like that. They saw comps increase by 8%, whereas Anthropology, like we said, a little bit of a more mature demographic. They were up 7%.
It's my store. I love it.
Beautiful. I love the stuff I see there too. But again, neither of those stores have men's clothes, I don't believe. So I've never gotten a chance to peruse. Urban Outfitters themselves saw as the Urban Outfitters banner saw comps decline by 9% comparatively. So what's interesting about Urban Outfitters is, we've talked a little bit about the growth of resale and, secondhand and that whole market. And Urban Outfitters really, doubled down in that area when they created their rental business Newly, which allows you to buy and sell items that you bought from any of the Urban Outfitters banners on that platform. I'm pretty sure there's an app that you can download and you can engage with interested buyers that way. It reminds me of like a Let Go or like there's another one. Yeah, there's another one that I can't remember right now that my friends use all the time. But the rental business Newly, they tripled their net sales to 29 million. So they're definitely seeing some growth there. But due to supply chain issues, overall gross margins decreased by about 6%. And like I said, operating income dropped by almost 50%. Inventory was up 44%. So what we can expect to see is a lot of markdowns going forward. And that's going to place a lot more pressure on margins, which is arguably good for me because markdowns mean that
I need to head online right now.
Exactly. So Anthropology, yeah, right. Anthropology, Free People, absolutely. But there is some good news here. They have no debt. They have no debt right now and over $250 million in cash. So relative to some other retailers we've discussed who have about that much money in debt, they're in a pretty good place. And that translated so far this year into 11 new store openings and 4 closings. So that's 7 net new. And they're ending the first half of this year with 698 total stores, which is 32 more stores than they had last year. So I think this is going to be a difficult one to find an overall theme for.
Okay, let's think out loud here. So comps, let's go through the comps again. So Urban declines 9%.
Urban was down 9%. Free People was up 8%. Anthropology was up 7%.
So Free People, what's the target demo for Free People? I think of that as like women who are out of college. I think of Urban as men and women who are in high school and college, and Ebere.
Hello. I was like that, James.
And then Anthro is really, I think of like mid 30s to mid 40s women, maybe. Yeah. So it seems okay. So the ones that target older people seem to be doing better. That seems to be true. So
yeah. What's the price point for Free People?
It's definitely above Urban. I think it's closer to
so
Anthropology.
That's probably it too, because Anthro is higher price point.
Yes.
So,
Anthro is definitely, I would say, the most expensive of those.
So that might be it too.
Yeah. Okay. So I guess that bifurcation theme again, does that seem fair?
Yes.
Okay. So I'm going to write that down on our Urban Outfitters trading card. Ebere, what are you getting at Urban? What's your go-to since it's such a favorite store of yours?
These days, I like a lot of their flannels. They have really, honestly, like that's my thing. When it comes to the more discounty areas, right? J. Crew is a little more what I would wear. J. Crew and Banana Republic, I'm wearing that to work and stuff like that. Urban, I can wear that, to go out with friends, to go to dinner, things like that. It's not as formal, and personally, I feel as, you know, the more I get into my career, the more I want to differentiate sometimes, right? So like, I don't want to wear a polo to go, you know, hang out, right? I want to do something else. So they have flannels, and I think the quality, honestly, is pretty solid, because I have a couple that I've had for 4 years, and they still fit. They wash well, and, you know, I mean, not to do an ad for Urban, but they have good flannel, they have good denim, and accessories too. I just bought some really
Yeah.
funky sunglasses from them, that I'll show you guys at another time. But I really love, you know, some of their accessories. So honestly, anytime I see an Urban, I'm popping in just to give it a look. I might not buy anything, but you never know what you might find on the clearance rack here and there. So I don't know, I'm a fan.
All right. Good. You sold me. I'll check it out again. I always feel like Urban, like I think about more about like the knickknacks and accessories. Like they always have like
Yeah.
like a vinyl record area.
Yeah.
I always feel like they're selling my childhood to younger people when I go in there. Not even my childhood. I'm now too old to have my childhood. Like the nostalgia is now like about the early 2000s.
Right.
It's a nostalgia. It's a discovery thing, and that's the same with Anthro as well. You go into their store and you go in because you want to see stuff that you're not going to see in other stores, whether it's just a random pile of curated books or, like you said, knickknacks, like, you know, closet door or knobs, or it's just random, but it's all so cool and so well curated.
Yeah.
It's just,
Agreed.
it's a great experience.
Awesome. Okay, good. So it's time for our roundup. We've collected themes of megatrends from our 9 chosen retailers, some doing better, some doing worse, some doing in the middle. So let's kind of go through these and see what we've got. I'll make some stacks here in front of me. Really great visual for you guys. I need like an overhead camera,
right,
or something.
Yeah.
So for Express, we've got mid price point struggling. So that's kind of like the bifurcation. Best Buy, back to school, back to work. I'm going to put that in a different pile. Chicos, return to the real world. High income shoppers still shopping. Well, that's both of those piles.
Yeah.
So that's kind of like overlapping here. The Gap, inflation impacting middle, lower income shopper. Yep. So that's along with a mid price point struggling. Bed Bath, bifurcation, middle price struggling.
Right.
Nordstrom, luck strong, value shopper decreasing. Guys, notice some common themes here. Ulta, people going out again. Dollar General, shoppers trading down. Urban, bifurcation. So literally there's 2 themes here.
Wow.
It's really about that bifurcation, and then people going back to the office, people going back to work, back to school. So I love doing this way live, because it makes it so clear how such a small handful of themes can describe what on the surface is kind of like a real mixed message about, you know, you just hear about all these earnings and you're like, well, wait, these guys are up, these guys are down, what's going on? And you kind of look at it and you realize, oh, a small handful of megatrends, along with inflation, you know, can really explain a lot of this stuff.
Absolutely.
So if you guys were to collect these cards like they were trading cards, which one would you want to hold for the long term? Which one do you think you'd, if we play this game a year from now, would have the most playing power?
It's a tough one, James. I think they're both, yeah.
I mean, I'm in between, you know, again, in that high low sort of discussion, I'm in between Nordstrom and Dollar General, you know.
Okay.
I wonder what let me see, what do we have about? Yeah, we have a lot of numbers about sales growth. I wonder what the actual sales are at Dollar General, right? Because we're talking about mostly dollar items, whereas Nordstrom, we're talking about, you know, expensive luxury items. So I might go with Nordstrom. Sorry to steal that from you, Keisha, but I think I'm going to take Nordstrom for the long run.
Okay.
Wait, are we taking individual cards or themes?
Card.
Okay.
So Nordstrom for Ebere. What do you got, Keisha?
Oh my God. All right, I'm going to take Ulta. I'm bullish on going
super
up.
smart.
Yeah.
Okay, so Keisha's going long on Ulta. Ebere is going long on Nordstrom.
And James is going long on.
You guys, I'm going to go for broke. I'm going long on Bed Bath and Beyond. I think they're at the bottom. I think that it's time for a recovery. I do think that people are getting back out there in the real world, and that so they're spending less on their homes right now. But that's a short-term thing. And in the long term, I think Bed Bath is going to figure out its product mix. And I think people are going to go right now. They say buy low, sell high. Now's the time to buy Bed Bath. So I'm going with it. You guys, this card is going to be more valuable in a year. You're going to be wanting to trade your Ultas and your Nordstroms for my Bed Bath in a year from now. What do you think?
James, I will take the air conditioning at Nordstrom and let you have that personally.
I feel like that's sort of an apocryphal story. I feel like I feel like I read that like there was one guy who went in and noticed it was too warm in one of the stores, but I think since then I don't want people to get the wrong idea about Bed Bath & Beyond. I think they are using air conditioning.
We'll see.
So that's it for the retail roundup. Thank you guys for participating in this extra special episode of everything we know about retail. I want to let everybody know about an upcoming webinar that we're doing. It's called the Retail Reset, All Eyes on the Consumer. This is going to be on Thursday, September 13th. The stars of this are Josh Pogue, who's the president and CEO of Pogue and McEwen Shopping Centers, which owns a portfolio of, I want to say, 14 lifestyle centers across the U.S. And then the other guest star is going to be Ryan Severino, who's our chief economist. So it's going to be a continuation of the themes we talked about today, but it's going to be in a webinar setting. If you want to sign up, you can for free. Go to jll.com, go to the Trends and Insights section, click on Webinars, and sign up for the Retail Reset webinar, All Eyes on the Consumer. Now, you can also download our latest research reports. Back to school shopper surveys up there. Q2 Outlook's going to be up there soon. Luxury report will be up there soon as well. Just go to jll.com and go to the Trends and Insights section. And finally, I just recorded a whole new batch of really cool interviews at the ICSC conference in Orlando, Florida for Where We Buy. That's sort of like, I don't know, if you like How I Built This, that podcast, you'd probably like Where We Buy because it's specifically on retail topics, but they're more in-depth conversations. You can check it out on the web at wherewebuy.show, or you can go to whatever podcast app you like and just search for Where We Buy.
Absolutely. And if you like this show, please be sure to subscribe on YouTube. And also, not just subscribe, but click on the bell icon so that you are actually notified when there's a new show available each week. Okay, both of those are important. And additionally, you can follow us on the JLL retail page on LinkedIn, and all of our content is available there as well.
Excellent. So we're going to be back next week. New episode next Thursday at 9 a.m. Pacific, 12 Eastern. So, Ebere, what did you learn about retail?
What did I learn about retail? I learned that the bifurcation trend is going strong. We're high-low. We're not in the middle.
All right, Keisha, what did you learn about retail?
I learned that people want to look good. They're heading to Ulta for makeup, and they're heading to Nordstrom for going out clothes.
And what did I learn about retail? You know what? I think that I learned that, if you're going to bet on a consumer, you want to bet on older people because they're older people with money right now. That seems to be where the store growth is at.
Absolutely.
So if you want to learn more about everything we know about retail, you can join us all here again next week.